Hey fam, yeah, welcome back to my channel. So this video is the second part of the sustainability class. I actually released a video on my channel that contains introductory aspects of sustainability. Make sure you watch that first before watching this one because you have to understand the introductory aspects to understand how to analyze and how to interpret. So today we're going to be talking about the analysis and interpretation of a sustainability report, and I'll be sharing with you the possible requirements you may see and how the case study question may come and how to tackle it as well. We'll just be talking about it a bit. All right, let's dive in. So now, first thing is just do a little recap. So in the first video, please watch that first. Like I said earlier, we talked about sustainability. We said how sustainability covers like issues relating to the planet, issues relating to people, issues relating to peace and prosperity. So in the Ican case study exam, they could give you a sustainability report and they can ask you to analyze and interpret it. Now, sustainability reports are reports that cover the activities of a company in relation to how its operations affect the environment, how they treat people, or probably how the operations affect the economy and all of that. Now, analyzing sustainability reports, first of all, I want you to have this image in your head. Think of it like a financial statement. Like if you have income statement or statement of financial position, for instance, how do you analyze it? What you do is that you calculate ratios, right? You probably use, for instance, gross profit ratio or gross margin ratio. You say, okay, what's the gross margin and what is the revenue? You divide it to get your answer. When you are done, you move to the body of your report and interpret. Now, think of it in the same way. It's not different from what you know, but in this case, now instead of you assessing an income statement or a statement of financial position, what you're going to be assessing now would be a sustainability report. So the figures, the information that you'll be considering will be information relating to things like environment and the likes, you understand? So have that image of, okay, is definitely what I know before, so that you will not be too like pressured and too tense that, oh, this is a new thing. No, it's still what you know before. So, but it's just like taking a different shape, you understand? So now, when we interpret the sustainability report, we are simply trying to understand how a company is handling its environmental, social, and governance issues. This means checking the facts, looking for risks and opportunities, and deciding if the information is accurate or reliable or unreliable. So in this case, just like I said now, when they say interpret a sustainability report, what they're just basically saying is that you should look at the environmental, social, and governance issues of a company. Okay, how does the activities of a company affect the environment, or how does the environment affect the activities of a company? How does a company affect this, like the society, its employees, its customers, consumers, and what are the issues relating to governance? So when they tell you to assess a sustainability report, these are the areas that they want you to look at. And what are they telling you to look at? You look at facts, you look at risk, opportunities, you check for accuracies, reliability, skepticism. Like I said, it's just what you know. You know about financial data analysis, financial statement analysis is the same thing you are doing. But in this case, you are looking at it from the ESG perspective. ESG is environmental, social, and governance, by the way. All right, now, what are the types of information that you may see? So, in a sustainability report, you would most likely have two types of information. You have the qualitative and the quantitative information. Now, what do we mean by this? Quantitative information are basically numbers, you understand? Like, this involves you measuring performance using tools like ratios and all of that. The qualitative information, these are like words and explanations. So how do I mean? Now think of it like if in an income statement. Now, you know, in an income statement you have like the tables: revenue, costs, gross profit, and the likes. Then you have notes to the accounts. It's making sense, right? So now, in that case, now we can say that income statement has both quantitative, that's quantitative is numbers, or revenue is 5 million, cost is 10 million, blah blah blah, and it has what qualitative information. That's like notes to the accounts where they tell you the stories of the company, understand? So in the same vein, a sustainability report could also have numbers and also have like stories. But most times people will always say a sustainability report usually have like stories and all of that, but you could have a mixture of both. So ICANN could give you that kind of situation whereby you have to analyze both qualitative and quantitative, or analyze just quantitative, analyze only. It could come in different ways, but I'm just trying to let you know the kind of information that you may see and you may be asked to analyze. Now, there are so many techniques that you can use to actually analyze or interpret sustainability reports, but this analysis, they could be qualitative or quantitative. Like I said earlier, ICANN could give you an information or a sustainability report that would either be stories, filled with stories, or filled with numbers. You understand? So, of course, if you are having a sustainability report that is filled with numbers, that's like quantitative is number. You understand? You have to do a quantitative analysis. But probably they're asking you to analyze something relating to like a story or words or explanation, that kind of thing. And that will be qualitative analysis. So they could ask you to do quantitative. In that case, probably you have to calculate. Or they could ask you to do qualitative analysis. That's in that case, you have to what? Explain, maybe write a story or something. Like for instance, in May 2025 diet, they said something relating to that. They told them to prepare an extract that will be included in the sustainability report. So they gave them some information and all of that. So in that case now, we could call that a qualitative analysis because they didn't calculate anything. They were just writing stories and explanation. So that was a qualitative analysis where you have to like talk about numbers and all of that. So you can see now, you understand? So but it could come that you have to calculate, so you have to prepare yourself very well. Now let's look at the techniques that we're given in the ICANN new study pack. Now the first one they said was the framework analysis, framework based analysis. Now from the first video I explained to you and I talked about the triple bottom line, I talked about sustainability reporting and all of that, and I also talked about like standards. So in sustainability as well, when we're dealing with sustainability reports, we also have standards. Just like you have your IAS, you have your IFRS. In this case too, we have standards. So when it could come like I can tell you that okay, you should check if the company follows like a standard. Like they have different standards actually. We have the Global Reporting Initiative, that's the GRI. We have the ISSB standards. All these things are just like IFRS and IAS actually. So they could tell you that oh, assess if the company is actually following the standard. Like now, for instance, IS2 talks about inventory, and it said inventory should be lower. It should be measured based on lower of cost or net realizable. It should be measured by lower of cost or net realizable value. You understand? Something like that. So these standards also have their own, like, should I say, the way, the guidelines, the principles. You understand? So they could tell you, okay, based on GRI, this particular GRI standard, the company should measure this particular figure based on this or this. Yes, and just like the example I gave for IAS, then you will have to check, oh, wow, no, this company did not do it in the right way. You understand? So you have to talk about it that, oh, in this case now, the company did not follow the GRI standard. So let's just create a picture now. So let's say the GRI says that you should use 2. You understand? Measure it by using number 2. I'm just giving an example. And the company used number 4. The company did not follow the standard because according to the GRI standard, the GRI standard says that we should use number 2, but this company used number 4. So something like that, they could give you like that kind of image that okay, the company actually following this particular standard, and they'll ask you to check it. So that's framework-based analysis. So framework-based analysis in summary is a quantitative analysis that basically covers you assessing a sustainability report using the standards like the GRI standard or the ISSB standards to see if they are complying and all of that. Now, data collection and validation. That one is a quantitative analysis as well. So in this case, what you're doing is that they would ask you to check for accuracy of data. They'll ask you to compare. They'll ask you to check for trends. Check if the data they are using is valid and all of that. You know, I made mention of it that the reason why they brought about standards was for compliance and comparability as well, because a lot of people were doing a lot of subjective things. But unfortunately, even though there are standards, people are still preparing their sustainability reports the way they want. Like the standards are still like they're still trying to adopt it and trying to improve on it and trying to make people to start using it, you understand, and implementing it in their companies. So in this case, I can't tell you that check, oh, their data is it accurate, so provide you some information, and then you would probably compare and all of that. So that's a possible situation. Another type of analysis is quantitative analysis. So in this case now, you calculate like ratios, trend. In this case, you're doing pure quantitative analysis, just the same way that you would do for a normal financial statement. You understand? So they are doing pure quantitative analysis. They will ask you to do trend, ratios. They can tell you, okay, these are the industry standards. Industry averages are like based on what is obtainable in the industry. This is the percentage. Like let's use financial statement for instance now. Like based, let's say the company is into fashion, so it's going to be in the fashion industry. So yeah, you can say that, oh, the gross margin ratio, the average gross margin ratio for all fashion companies is 5%. You understand? So if you calculate now and you see your company's own is 2%, you know, the company is below the normal average, or if it's like the company's own is 10% or is above the normal average. So they could give you industry average, like what is obtainable in the industry, and they can tell you to compare. You understand? You calculate your own and you compare. I think they did something similar, if I'm not mistaken now, May 2022 diet. I think that was Best Price Fashions Limited. So in that particular case, they gave them industry averages and they asked them to compare. So they could give you that kind of situation. So you calculate your own ratios, you compare, or you just calculate your ratios and talk about them. You understand? And of course, it's not the normal gross margin ratio or return on capital employed. There are specific ratios that are suitable for assessing a sustainability report, of course. Then the ratios as well, you have to learn it. It's just like a bank. You know, the ratios are used for a bank. You know, you have capital adequacy ratios and all of that. They're different from the like normal ratios that we use, but it's still the same way you do ratio analysis that you do for this one as well. Then they can also ask you to do qualitative analysis as well. In this case, like I said, just like May 2025 diet, they can tell you that you should talk about the strategies of the company, the policies, talk about stakeholder engagement, talk about different things. So this company, the sustainability strategy they're using, is it good? The strategy they're using to protect the environment, is it good? Something like that. They can tell you to assess it. Then external data integration. So this one is a qualitative analysis. In this case now, they can tell you to compare the performance of the company with particular ratings. It's just like the industry average, like I said now. They can tell you that, okay, the ratings of the company, let's say, oh, the rating is that people are protecting the environment well. So we rate the protection of the environment by 80%. Look, let's say for instance now, in the fashion industry, the companies that are into fashion, they are what? They are protecting the environment. So we rate them 10%. Just like now, just like you're scoring over 10. Ratings are like scoring over 10. Think of it like position, think of it like CGPA, all of that. So now in that case now they'll say, okay, oh, the average, just like industry average actually, the average ratings of the fashion industry is 10%. So your company now, let's say your company is not like 1%. That's not good. So in this case now, you are comparing the performance of the company with the average. Okay, everybody in the industry, they are actually doing well. So they were rated, let's say they were rated 80%. Let's give a good score. They were rated 80%. You understand? And your company is just 10%. You got this company is not doing well because other people in the industry, they're scoring 80%. We were scoring 10%. You cannot advise them, oh, these are the ways that you can use to improve your ratings and all of that. So that's what external data integration. So you're using external data, you're using what is happening in the external environment, that's in the industry. When you're talking about external environment, you're talking about the industry. You understand? So you're using what is happening in the external environment to judge the company, something like that. Do you understand? So then they could also tell you to do, well, can I really tell you to do this? Advanced analytical techniques. That's the other one here. They'll tell you to use softwares, charts, or graphs. They might not necessarily bother you with this in case study, but probably in the real world, they can give you. But that was one of the techniques that were listed in the study packs, and in the study pack rather, and I thought to bring it to you. So they can tell you to use softwares, use graphs and charts. That's another way we can actually assess the sustainability report of a company. Then identifying greenwashing. So greenwashing is just saying that you're exaggerating your achievements. For instance, let's say the company was able to protect the environment by, like, the protection they did was 5% protection, but then they now say they are doing 75% protection. they have exaggerated their achievements by 70% because you're doing 5%, so you're doing 75%. You understand? So exaggerating achievements. And of course, there's a lot of subjectivity when it comes to sustainability reporting, because you cannot really rate or really say put a particular figure to say this is the way I'm protecting the environment, or this is what I'm doing right, or this is what I'm doing wrong. There's a lot of subjectivity around. So many times companies often actually exaggerate achievements. So in this case now, they can tell you that you should check for accuracy. And in this case, I'll be doing what they call professional skepticism. You're checking, oh, this information, is it reliable? Is it accurate? So these are the kind of questions that could come. You understand? So prepare for anything. Now, just like we said, quantitative analysis involves using ratios, using trends. So I actually included some ratios here for you to see some possible ratios that could be used to assess a sustainability report, so you can go over it, learn it and all. And I categorize them into the three pillars. You understand? The environmental, the social, the governance and all. Please, if you have not watched our first video, watch it so you can understand clearly. So I categorize them for you. You can read up, you can learn more. I'm not sure this was in Ican pack, no, but you can learn more, you can read more. Yeah, they talked about ratios in Ican pack, I remember. Yes, they talked about it, but you can just learn more, you can read more and get more clarity. All right, now the principles of analyzing and interpreting sustainability reports. So these are like saying, okay, how should you analyze a sustainability report? What should you do? It's just like now when you're doing ratio analysis for income statement or statement of profit or loss or whatever. What you do, okay, you first of all go and calculate your ratios. You interpret. There are steps that you do. There are things that you do before you can actually do ratio analysis and all of that. So in this case now, how can you actually analyze and interpret sustainability report? What are the steps that you should follow? Now, the first one is what you have to understand the company. Now, of course, when they release the person, you definitely know the industry that the company is actually operating in. Okay, is it the fashion industry? Is it the hospitality industry? Is it what is technology? What are they doing? Understand? So your job is to analyze and research, check, okay, what is actually happening in the industry, know about the industry, know about the happenings that are in the industry. For example, I said here, a water bottle company faces different sustainability issues than a tech company. You understand? So the issues that a water bottle company like Ever, like all this Nestle and all of that, the issues that they face will be different from a tech company. You understand? So you have to understand, okay, what are the issues that are happening in this kind of industry, so that it will help you when you're interpreting. Then you also want to focus on important issues. There are so many issues. When you start researching, there are so many. And how many do you want to know? So Google, what are the material issues? What are the important issues? What are the most significant issues? Like I said, for a factory, emissions and wastes are more important than office usage, office energy. Like a factory is like the emission is saying that the smoke that they are putting in the atmosphere, the wastes that they're having, of course, those are like more important than office energy. Office energy is like saying the energy they're using in the office. Like for instance, now you can say office energy is like maybe the lights that are using, the electricity and all of that, fossil fuels and all of that. But in this case now, the emission is more of a problem. You understand? So there's material issues and immaterial. The immaterial is not like they are not issues, but we can still categorize them as secondary. So what are the primary issues? Now then you also check the data. Now the information that they are reporting, is it reliable? Is it accurate? Because this is actually a very, very big issue when analyzing sustainability reports, because like I said, there's like subjectivity. Even though standards have come and these standards have tried to ensure comparability and all of that, but that subjectivity cannot just be like, it's still there, because it's difficult to say I did my protection, the way I protected the environment, I did this was the percentage I protected. There's a lot of subjectivity, you understand? So you have to ensure that you always check the information, verify the emissions, verify, okay. And again, another way that they use to sort of put credibility to that information is by carrying out audits. Yes, they actually audit sustainability reports. So if you see that an independent external party has audited the report, you can relax a bit. It's this thing I'm just saying. It's the same thing, It's just like professional skepticism as well and assumptions. You understand? Do you understand? When you have like management accounts and you have published financial statements, all of that, you understand? So you know that management accounts, the reliability level is low, but a published financial statement that has been assessed or reviewed by an independent external party or auditor, that one has some form of credibility. So in this way too, if you're seeing that the sustainability report of the company has not been audited, that's the red flag. So you can talk about that as well. Then you can compare with others. So if they give you industry averages, you understand, you can say, okay, what is this company doing? How is their people in the industry? So you can compare as well. Then you can look at trends over time. You understand? So see if the company is improving or declining. Understand? So if you are saying that carbon emissions decreased, that means carbon emission is saying that, just think of it like smoke that they are putting in the atmosphere. You understand? So if before it was 50%, now it's now 40%. That's good. The company is doing well. You understand? So you can look at all those things that are happening to see how well the company. So I'm giving you an idea. So if I can give you a sustainability report, these are the things that you can do to actually analyze it. So check for all these things. Then you can check qualitative information too. So if they give you stories, you can check, okay, what are the strategies that this company has. If a company say, we have no strategy, or anybody that is offended by the smoke or the carbon emissions we have, sorry, that one is an ethical issue, unethical business practices. You understand? So check the qualitative information as well. What is the plan the company has and all of that. So then you can also look at the financial aspect of the company, the finances actually. So you can see how the sustainability affects profit or loss. It is that they're carrying on their profits to reduce carbon emissions or something like that. You can advise them that, okay, while this is good to actually reduce carbon emissions, people take care because you carry on your money. How much will you use to run your business? You understand? So check all those things. So check as well, and also check too that sometimes, like, look at the example I gave, energy saving can actually reduce electricity bills. You understand? So check too that, what they are doing, is it actually impacting their cost and profit? Does it have positive effect? Does it have negative effect? Check all of that. Then be critical and skeptical. Question and check for greenwashing. Any exaggeration, check. You understand? And like I said, if a company claims zero waste, how will you not have waste? You definitely have waste. Even in a home, you have your garbage bins and all of that. So you definitely have waste. So just check if this information is looking like this one is not possible. And that's why skepticism is subjective. Don't say, my own, is it a good skepticism? Am I questioning well? It's subjective. Just like that's why I said professional skepticism. Not that you just be questioning everything. You have to look at it like a professional and questioning. So this when they give you a sustainability report, these are the things that you should think about that would help you to interpret. All right. Moving on. Now, the standards that guide analyzing and interpreting sustainability. So there are some standards that actually guide you when you're interpreting and analyzing. Like I said, I mentioned some of them in the first class, but let's just look at them here. So now, this, like I said, I've been emphasizing it a lot, that these frameworks help us to compare. They aid comparability, just like IAS and IFRS. IAS and IFRS, they help us to compare. You understand? So in this case too, these standards also help us to compare. They help us to trust information because there's a lot of subjectivity. I'll still keep mentioning it. So it sort of gives us some form of peace of mind, if that's the right word. Okay, this person uses standards. Okay, so an extent, I think it will be good, and it helps to make sure that nothing is left out. So in this case now, they'll say, okay, put this. Nothing is left out. You understand? So one of the standards are GRI, you understand? GRI standards. So in this case now, they will tell you to report on all global reporting standards. In this case now, they require the company to report on all aspects of the company. They'll tell you, okay, report on people, report on planet, report on profit, report on everything. Then we have the SASB standards as well. This one, they focus on the financial aspects of the company. Now, in this case now, people, planet, and profits. But in this case now, GRI covers everything. SASB is saying that let's cover only profits. While we are concerned about the others, but these profits, we're concerned, okay, how is how is sustainability affecting our profits? Okay, now because we are trying to protect the environment, are we making loss? Because we're trying to protect the environment, is our cost increasing? So in this case now, that's what SASB focus on. So if Ican wants you to use SASB, they will be focusing on checking. Now, the SASB is the Sustainability Accounting Standards Board. Now, this is also a body that actually creates standards that are used to analyze and interpret sustainability reports. So, in this case, now they are saying that they are focusing on issues that affect the finances of the company. You know, GRI is saying that we should cover everything. We should look at all the aspects of sustainability. It's global, it's general, but SASB is saying that let's focus on others, quite all right. But our main target is how sustainability issues affect the profit of the company. You understand? So in this case, now they are focusing on the profits aspects of sustainability. You understand? That's the main target. So if I kind of want you to do something like that, they will probably give you the finances of the company, probably the costs, the revenue that the company is generating, and the cost they're incurring on trying to protect the environment, probably because they're trying to protect the environment. Let's say, for instance, they maybe they buy waste bins or they do good drainage systems or I don't know, something like that. So they will just give you the cost of all that and they will tell you to say, okay, this cost though, are we benefiting from it? Is it affecting us generally? Something like that. Then integrated reporting. Integrated reporting too is another framework that you can use to assess sustainability reports. In this case now, they are saying that they are looking at how a company creates and preserve value over time. You understand? So they're integrating everything. So it's like over time. You understand? They're not just considering just 1 year. They are checking different years. You understand? They're integrating it's like over time, how have you preserved value? Over time, how have you created value? Over time, how have you protected the environment? What is the social aspects? What is the financial aspects? So they are looking at time and time again, you understand? In that case. Then Carbon Disclosure Project Act is another way you can actually analyze it as well. So in this case now, this one reports on environmental impacts. You understand? So in this case, we're looking at the impacts. We're looking at carbon emissions. We're looking at impact on water. How is the company affecting the forests? You understand? For instance, the paper company. Paper is made from wood. So are they just going to the forest and harvesting all the whole trees that we have in the universe? You understand? So we're looking at the carbon disclosure. We're focusing on that. That's carbon disclosure projects. Now the TCFD, that's the tax force on climate related financial disclosures. This one, they're saying that you should disclose climate risk. So they are focusing on climate risk. So disclose it, talk about it. In this case, that's what they're focusing on. Then the UN SDGs too. This one, they're now looking at, okay, how does a company align with sustainability? You understand? How does a company align with the SDG goals? In the first class, please watch that video once again if you haven't watched it. We talked about the SDGs and all of that. So they're looking at how the company's activities align with the SDGs. Are they trying to help the world achieve those goals? Are they contributing their own quota? Something like that. Then the ISSB too. This one, they are the ones that developed the IFRS S1 and S2. If you don't know what IFRS S1 and S2 is, go and check the first video. I explained it in detail. So now, in this case, now these are the standards that they could give you. You understand? So, but I think GRI is the most common, and I think IFRS S1 and S2 as well. I think those ones are like they are very very common. You understand? So it's very very high. Like it's very very possible that they may give you something relating to that. Now, let me give you tips on how to prepare reports, because now you're new to this, you might not know how to do this. How do you now go about it? The first thing you should know is what are the needs of the users. That's your requirements. Go and check your requirements very well. What are they asking you to do? What do they want me to achieve in this particular situation? When you understand that, then determine the suitable methodology. Okay, in this case now, is it ratios I will need? Okay, are they saying that I should assess the trend of environmental impact? I should assess the trend of how the cost that the company has incurred on environmental protection? What are they asking me to do? As I said, first of all, understand it. That will help you to determine the most suitable way to tackle the question. Then, when you determine the suitable way, then you go ahead and analyze using that tool. Then, when you're done, interpret, you highlight weaknesses and strengths, you conclude, recommend, and then use charts and graph when necessary. You understand? So you can see that this is just like the same way you do your normal financial data analysis or financial statement analysis. You calculate in the appendix, you go to the body of your report to interpret. Still the same way. Like I said, it's still what you know. Just that this one is taking another shape and form, in the sense that this one is focusing on environmental protection, but still what you know. So don't get worked up and say, I don't know. It's still what you know. Now let's look at the challenges. There are some challenges that are experienced as a result of, like, when you're trying to analyze or interpret reports. All that, because it's not good, it's not going to be easy. But now, what are these challenges? Let's look at them. First of all, companies may report differently even when using the same frameworks. You understand? So now, we have talked about different frameworks. You understand? So let's say two companies are using GRI, the Global Reporting Initiative, that says that we should report all aspects of sustainability. Fine, company A and company B, they will both be using GRI, but the way that they will report is different. That's what I'm saying, that although these standards are here to help us to help to improve comparability and all of that, but we're still not there yet. It's a process. Companies are still trying, countries are still trying to adopt it and all. So there's still a lot of differences that you may observe from two companies that are using the same framework. That's another challenge. Now, data may be missing, unreliable, or calculated in different ways, because I said it's very difficult for you to say, okay, I protected the environment by 5%. I affected the environment by 10%. It's difficult to actually determine that data. You understand? And so that's why it may be unreliable. And this is why you have to raise your professional skepticism when you're preparing or analyzing the sustainability report of a company, because that particular information is highly, or let's use the word likely, to be unreliable or inaccurate. Then companies may focus on areas they do well, greenwashing, and then ignore the weak, the weak areas. Of course, now, if it is that they are affecting, now look at what's happening in the Niger Delta, that oil companies are destroying the water, the fishes, and all of that. They will not focus on that. They'll focus on the good one that they are doing. So that can also of course, you're not really saying what you're actually doing. That can affect the whole analysis. Then, reports focus on the past, giving little insight into the future. So in this case, they're focusing on what they did. Okay, how about what you're going to do? And that's why they also said that you should assess the strategies of the company. What are your strategies? What do you hope to achieve? Where are we going to? You understand? Then, sustainability issues are complex. You understand? It's difficult to connect them with financial results. There's a lot of complexity. Although ISSB standards, that's the IFRS 1 and IFRS S1 and S2. Although the ISSB standards, that's the IFRS S1 and S2, it's actually helping. You understand? But there's still a lot of complexity. Then the ESG ratings are not always accurate. You understand? They may interpret reports differently. So there's a lot of difference. Then the field keeps changing. Analysts keep learning. Like I said, people are still trying to adopt it. People are still trying to jump on the trend. So there's changes. It's dynamic. So this may be the trend today, and tomorrow it changes and all of that. Then analyzing reports can take time. It needs special skills. And this is why I believe that if Ican wants to give you something relating to this, they may not really bother you too much with a lot. I know, you're finally happy, yes. They may not really bother you too much with it, because proper analysis and interpretation of a sustainability report requires special skill. It requires expertise. So they might not really bother you much with too much information. Then the way they can tackle this is that you focus on the most important issues. You check if the report has been verified by an independent party, right? Is there an independent assurance that will give us some form of trust or some form of the peace of mind, I'll call it now, something like that. You understand that? Okay. And again, if they use the particular framework, okay, let's see how this framework works. Is it reliable? Something like that. So then You can compare with other companies. If this company is saying that we protected the environment by 80%, and other companies are saying 40, 50, 50, how is your own times two of your counterparts? You understand? How is your own times two of the people in your industry? So that can help us too. Then you can what question claims. You can raise professional skepticism. Then build skills in sustainability, stay updated, and state any assumptions when necessary. Now, I want to show you a possible requirement. Now, disclaimer: I can't just started including sustainability in their questions, so there's no diets. You understand per se that you can say, okay, let's use to solve. So I just came up with this question just to help you. So disclaimer. All right. So I just came up with something that might help you like have like clarity on all what we have been saying, and you understand. So this is just to help you. It's not like an exam question. So don't go and print it out and say, ah, yes, somebody said like it was an exam question. Let's cram it. Please don't do that. It's just to help you like get clarity on all I've been explaining. So sustainability reports are usually prepared as a separate report from the financial statement. Like they can give you like a separate report. It might not necessarily be like, you have something like statement of profit or loss or other comprehensive income. After you do your profit or loss, you have your other comprehensive income underneath. It might not be like that. Sustainability report is usually like a separate statement on its own. Just like statement of financial position is different from cash flow statement, is different from income statement. So sustainability report most likely will be like its own, on its own. So think of it like a report card of the company. So they'll tell you what the company has achieved, the revenue they have generated, the costs they have incurred on different aspects, costs they have incurred on environment, costs they have incurred on profit, costs they have incurred on the social aspects, that's on their employees, on the community, understand? Then the company may attach key SDG ratios or notes to the account alongside. So they could give you some notes to the account as well. It's just like normal financial statement, right? They usually give notes to the account as well. Then you usually get a table or a set of like data. They tell you about the social, the people, planet, and the economy, right? So they'll tell you about the social aspects, the environmental aspects, the profit aspects of the company, and all of that. Now let's look at an example. This example, the name of the company we're going to be using today is Green Co Limited. So we have 2023 and 2024. So you can see that they gave us profits, they gave us people, and they gave us the planet as well. So you can see that this is our profits. This is our profit revenue, right? Then this two now is our environment, understand? That's the planet, that's the environment. Then these ones are the what? Are the people. You know that we have 3 P's. If you don't understand what I'm saying, please go watch the first video, please. We have 3 P's. We have the people, we have the planet, and we have the environment. You understand? People, planet, and profits. People, planet, and profit. People is talking about like the employees, the community. Then planet is talking about the financial aspects of the company. Then planet, let me recap that again. People is talking about employees, community. The planet is talking about the environment, and the profit is talking about the financial aspects of the company. All right, so let's go on. So in this case now, we have all of that. We have everything. So would now start looking at each of them one after the other. Let's clear this out so that we can have our question. All right, so we're good to go. So now in this case, now you can see that they gave us the revenue, they gave us the carbon emissions, energy used, and then everything about the employees, directors, and all of that. So now they can tell you something like this that calculates, just like you have in normal financial statement analysis. They'll say evaluate profitability, liquidity, operational efficiency, long-term solvency, financial strength of a company, blah blah blah. In this case, now they can tell you to calculate specific things. Now, if we look at November 2022 diets, I think that was Kudi Microfinance Bank. The ratios they asked them, they were different from the normal ratios, because the ratios that you use to assess the financial statement of a bank is different from the one you use to assess a normal company, you understand? So in this case now, the ratios you use to assess the sustainability report of a company is different from the normal ratios. So you have to go and learn it. In this document earlier, I don't know if you remember, if you're following me closely, I gave you some ratios. It's not limited to this. Go and learn more. Go and learn more. But for this class, these are the ratios that we'll be considering. And we also asked to briefly comment on the trend as well. So you know how it works. You have your interpretation. Before you even look at your interpretation, in your appendix section, you have like ratios, formula table, and you calculate, the formula for carbon intensity is the carbon emissions divided by the revenue. So you get that. Then your energy intensity. So you just keep applying the formula. It's just like the normal way you do ratios. You keep applying the formula to get the answer. All right. So when you are done with that, then you start to interpret. In this case now, you can see that carbon intensity. What happened now? We have 3% and we have what? 2.2%. You understand? 3% and 2.2%. So that's what there was a decline. Then carbon intensity, what happened? From 3, it declined as well to 2.32. The employee turnover too, it declined, but the board independence increased. Then the renewable energy ratio was increased as well. So now let's look at how we'll put this into writing. So you have your heading, the review of the environmental, social, and governance performance. So the sustainability performance of green coal showed an upward trend across the environmental, social, and governance areas. Carbon intensity decreased. You understand? Suggesting that the company is becoming more efficient. Now, carbon intensity is saying that how much carbon is the company releasing to the atmosphere. Think of carbon like smoke. You understand? Smoke from cars and all of that, or smoke from burning and all of that. I know when you're releasing smoke into the atmosphere, you're actually destroying the atmosphere. That's what we call like carbon. You understand? So in that case now, if they're saying that they reduced the smoke, I'm using smoke. Smoke is like the basic word, but I'm just trying to make you understand. So if they say that they reduced the amount of smoke they're releasing in the atmosphere, of course, that's a good one. Yeah, that's good. So that means what they're doing well. You understand? So similarly, energy intensity improved by what? Falling from 3 to what? To 2.23. You understand? Indicating that they are doing better efficiency. You understand? Their energy efficiency is better. So that's a good one. Employee turnover decreased. Employee turnover is saying that how much times the employee are leaving and coming back into the company, who left, who came back, like how was the turnover rate. So if they're saying that there's a decrease, that's a good one. You understand? So that shows that they are treating them well. Why are the people not going? People are not going because they are happy now, or at least they are okay where they are, right? So governance also strengthened, you understand, because even the board independence increased. So that shows that governance is solid. Then additionally, the company made gradual process with renewable energy as it increased. You understand? So this is just the same way that you do your normal financial statement analysis, that you do this. Then you have your conclusion. They showed positive trend throughout, and then they are improving. And this trend shows a growing commitment to sustainability that can enhance long-term performance, stakeholder trust, and operational efficiency. Then we have recommendations. Continue what you are doing. The carbon emissions, continue to increase them. Continue to adopt strategies or initiatives to reduce them rather. Then they should implement energy saving projects. They should develop employee engagement, maintain the board performance that they have, and increase investments in renewable energy. So this is the possible way that they could give you questions. Like I said, I can't just really asking these questions related to sustainability. So we don't really have like a proper sketch. But I just wanted to just add this to give you clarity that, okay, what can I expect? What are the possible questions that they could ask? How can I prepare? So this is a possible way they could ask you. Now, remember that I spoke about qualitative and quantitative analysis. This one that I just did now is a quantitative analysis. Because now, if you remember quantitative data analysis, that we said that the quantitative data analysis, in this case now, we'll be using things like ratios, trend, and the likes, you understand? So in this case now, what I did now was a quantitative data analysis. So they could ask you to do qualitative, that's in this case now, write stories, Don't calculate anything. Just explain. Just talk about this. Talk about strategies. Or talk about, is the company adopting the proper standards? Are they adopting GRI properly? Or they can tell you that GRI XYZ talks about this. But meanwhile, the company is doing this. Comment on it. Advise us. You understand? All these kind of things. You can check May 2025 diet. They gave an example of something like that. So they can give you qualitative analysis as well. All right, so I guess this is where we'll draw the curtain on sustainability. I hope this video's helped. If you know you want clarity on everything, watch the first video before you watch this one. And I wish you success in all you do. Take care. If you have not hit the subscribe button, please subscribe. Share this video to everyone that you know that will benefit from it. And I'll see you in my next one. Bye.